So guys, the most important price action rule that changed my trading, helped me become more consistent, have a higher win rate, and identify different market conditions is what we're going to be discussing in this video. Okay, this is one of the most important things to identify whether the market's going to be choppy, whether it's a very strong trending market, whether it's to the buy side or sell side. And there's a very simple strategy I use to identify who's actually in control, or sometimes no one will be in control. That's when the market is more range bound, more choppy. So anyways, that's what I'm going to be covering in this video. Hope you guys enjoy it. Let's dive straight into it. Okay, so the price action rule that changed my trading forever is going to be asking yourself the question, who is in control of the market? Are buyers in control? Are sellers in control? Or number three, is no one in control, right? So the first option is an imbalanced market, as you can see on the screen. Okay, what this persists of is strong trends, large candle equals one side in control. And you can kind of think of it as a tug of war where one side is just pulling and the other side is falling, right? They're getting a little tug back and forth. Maybe those are the pullbacks in that trend up or in that trend down. Again, it can be imbalanced towards sellers or buyers. It doesn't matter. All we want to see is the market imbalance. Now, you're probably wondering, well, Chad, how do you actually tell whether the market is imbalanced or not? So what I like to do is if I go over to the market today, okay, I'm on NASDAQ. That's why I like to trade. And what I like to do is I like to mark the top and the bottom of the first 15 minutes of price action. Okay, so this is called the 15-minute opening range. Now, to make it super simple, if we're trading above this green line, right, that means the buyers are going to be more in control, right, as you saw today. And then obviously on the flip side, if we're below the red line, that means the sellers are going to be more in control. And the way you're going to trade these markets are going to be a little bit different versus if the market is more balanced, right? Balance means we're more in a choppy range. There's more indecision. Neither side is in control. Okay, so the way I like to think of it is imbalance is like the 80-20 rule. 80% has the dominance towards the buyer sell side. 20% are the opposite side. So for example, 80% of the price action today is buyers. 20% is sellers, right? Which are the pullbacks. Okay, so you can probably guess, what's a good strategy to trade on conditions like today? Well, obviously, it's going to be trading pullbacks, right? Every time there's a pullback today, which is actually the trade I took today as well, right? This got bought up. These pullbacks all continue to get bought up because of that 80-20 rule, because buyers were in control. Okay, as you can see, this is the trade I took today. Once we broke above and retested the top of this opening range, I took it up to a 2-to-1 risk reward ratio. And obviously this won't go forever. This could flip at any time. That's part of the market. So that's why I always want to make sure I have key levels on my chart, different supply zones, knowing that we could flip up here and sellers could step back in and take control, right? Once this price gets overinflated, people aren't willing to buy it anymore at these higher prices, right? That's where sellers can flip over. But the whole point as a day trader, right, is to ride it up to those areas and identify those conditions in real time. Okay, so that's how I identify an imbalanced market is I'm looking, are we trading above the 15-minute opening range or are we trading below it, right? So you're just looking at the first 15 minutes of price action and marking the lows and the highs of that. And that's basically all you're doing. Now, if you're a trend pullback trader, like the example I just showed you, which is, one of my favorite ways to trade is trading trend pullbacks. What happens when there's more of a balanced market? Right? Well, either number one, you have to make sure that you don't take any trades that day because the market is not going to continue to rise on those pullbacks. It's probably going to flip because when the market's balanced, it's 50-50, right? 50% of the price action is sellers, 50% is buyers, right? So there's not going to be any trend pullbacks you can take, right? So if you do get in on a pullback, chances are that pullback's going to keep on happening and it's going to sell all the way off and then you're going to get stopped out. That's a more balanced market. Now, how do we identify a more balanced market? Well, again, I'm using the same exact thing, keeping it super simple, this 15-minute opening range. What we're looking at is, are we outside the range or is price action stuck inside the range, right? And this is what you'll see happen a lot. Eventually one side will break, But this is a really easy way to tell if we are balanced or not. Okay, so for example, today was very imbalanced, right? We can clearly see that. If we go back just to yesterday, as we can see, let's mark the first 15 minutes of price action. Okay, so I'm just going to delete everything so you guys can see, because these are levels that got created yesterday. And we're going to mark the lows and highs of the first 15 minutes. Okay, so the market opened right here where the black starts on my screen. I'm going to mark the low right here. We're going to go to 7:44 my time. So this is the first 15 minutes of price action right here. So from this low down to this high. Okay, so now I'm going to mark the top. The highest we got during those 15 minutes was right here. Okay, and what do we see? Okay, we're seeing obviously eventually we became a little bit more imbalanced as we broke out of it, but that was after like 3 hours or so. The first few hours we were inside this range. Okay, and what does that tell us? That tells us that the market is more balanced, right? It's a 50-50. Buyers went up, sellers equally sold it off. And then what happens again? Buyers bought it up once again. And again, on these days, if you're a trend trader, you're either going to have to wait until we actually break one side or just take no trades that day, or you can trade the range, right? So this is personally what I did yesterday. This is my trade I took. I traded the range, right? So once we got confirmation that we weren't continue going down, right, I got long right here and wrote it near the top of the range, right? That's kind of what you want to do, is write it to the other side of the range where we previously sold off. Okay, where that resistance is. You can see that'll eventually hit on the chart, right? And that's it. These are the three scenarios that can happen. We can either be very imbalanced towards the buy side like we were today, right? Or we can be very imbalanced towards the sell side. I'm sure you guys have seen those days where we just sell off most of the day. Or option number 3 is we're stuck in the range, right? But one of these have to play out. No matter what, price has to do something. It has to either stay in the range or go outside one of the ranges. And our job as traders is to determine which conditions we're in. And we do that by looking at the opening range, where price is, how it's trading based on this opening range, and then trading accordingly to that. You know, whether we're more balanced, taking the range plays, or if we're imbalanced, taking the trend pullbacks, right? And you can see doing that, I got a nice trade yesterday, trading a more balanced market. And today I got a nice trade, trading a more imbalanced market, getting in on those trend pullbacks. Now you might be wondering, well, Chad, how do you actually know when to get in? So for example, yesterday, right? How do I know when to get in right here? Or for example, today, how do you know to get in specifically right here? Well, I used a couple different confirmations. You know, everyone's confirmations are going to be a little bit differently, whether you're looking at the candlesticks, volume, just raw price action, or use some indicators like the MACD, the WVF, whatever it is, right? Everyone's going to have their own trading style. I personally built a few indicators that actually determines these conditions and automatically looks at all the confirmations and basically just prints signals for me, because I like to follow a very strict criteria, the same criteria every day, and it's able to do that inside the indicator. So for example, today I have this indicator I'm about to pull up. It'll only take signals if we're outside of one of the ranges. Okay, so you can see this will only take buy signals if we're above this green line, and it waits for pullbacks, right? And it automatically waits for confirmation to get in. So as soon as I saw this buy signal today, this is where I got long, put my stop below the lows, and then wrote it up to a 2-to-1 risk reward. As you can see, we get another pullback here, we get a buy signal, another pullback here, get a buy signal, another pullback here, get a buy signal, right? And it keeps taking the pullbacks because we're above this range, and the indicator knows that. It has that built into its code, right? Where we can go yesterday, and for example, I'm gonna pull out the other one. Okay, so I also have another indicator built for when the market is more balanced, right? So the first one I just showed you, this indicator on my screen now, is built for imbalanced markets. The second one is built for balanced markets. So I'm going to pull this up. As you can see, there's no additional signals because the indicator knew that the market was not balanced. It was imbalanced, so it's only using this one. Now we can go to yesterday, right? And we can see if we go to this one, right? What do we see? We don't see any signals on the imbalance indicator, right? So I'm going to hide this. As you can see, it doesn't really change anything. But if we pulled out the failed breakout one, right, this is the one I use for when the market conditions are more balanced. Right, what's cool about this is the indicator automatically looks at it for you. So you don't really have to like pay attention to the conditions because the indicator has it built into its code based on this opening range. But as you can see, right, it prints a buy signal right here as soon as it sees that we are more balanced and it failed to break out of this lower range, right? As you can see, once we get confirmation, the code gets confirmation, it prints a buy signal. That means all the criteria is there. I take it long, I put my stop below the lows, and I write it up near the top of the range there. So again, I just made these indicators to make it easier because it automatically looks at these conditions for you and prints signals accordingly. Obviously, you can do this without the indicators, right? You can use your own confirmations, whether you use the MACD or just raw price action, whatever you want to use. But you will have to look and pay attention whether the market's more imbalanced or it's more balanced, and taking setups accordingly. Okay, if you guys want to make this a lot easier for yourself and you want to get access to these two indicators, these indicators are available. If you guys are interested in learning more about them, we do have a free video that goes over more about how they work and how you can get access to them. If you guys are interested, all you have to do is go over to the first link in the description below this video or just head over to otsignals.com, and we have a free demo video that talks about the signals and actually how they work. That's really all I look at. This price action rule really changed my trading forever and helped me see the market a lot more clearly and taking setups accordingly depending on which condition we're in. Anyways, guys, hope you enjoyed this video. Again, if you want to check out those indicators, just go over to otsignals.com or hit that first link in the description below this video.
I've been trading for about 2 years now, inconsistently profitable. I ran across Chad's OTS. I've been using it for 6 weeks. I've had 5 profitable weeks and 1 break-even week. It has changed the game of trading for me.
Shout out to Chad and the OTS signals indicator. My best week so far has been $1,200 over the course of all my 20 Apex accounts. Just a little over $24,000 for my best week.
Since OTS indicator came out, I was actually able to go trading full-time. My average win rate for this month was around 72%. The average weekly profit is between $4,000 and $5,000. I can honestly say that it's changed my life.
As always, guys, I hope you have a great rest of your day, and I will see you in my next video with another day trading lesson.